This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Stansberry Vancouver Natural Resource Symposium 2015. Standing with me is Mr. Rick Rule from Sprott U.S. Holdings, Inc., and he's the chairman. This is also his conference. Ladies and gentlemen, Rick Rule.
Thanks for the opportunity, Shelley. I appreciate you coming.
It's good to have you. Let's give an overview of what Sprott does, and then I want to talk to you about the conference.
Sprott is a money manager focused on natural resources and precious metals, and particularly well known on a global basis for small and micro-cap natural resources and precious metals. We're also the operators of about $3 billion of exchange-traded trusts on the New York Stock Exchange focused on gold, silver, and platinum and palladium, respectively.
Are those ETFs?
They're trusts. They're different than ETFs in the sense that capital gains, if any, are taxed at the capital gains rate, while capital gains on ETFs are taxed at the collectible or ordinary income rate. So in that regard, for U.S. taxpayers, they're clearly superior products.
Now, this place is filled with investors of all shapes, sizes, and kinds. Why are they here at your Sprott Stansberry conference?
I think they recognize the value offered by the conference. Many people in the natural resources business are apologetic about 3 or 4 years of bad market performance. The Sprott point of view is that a market that, like the junior equities market, is off 90% in price, is arithmetically 90% more attractive than it was in 2010 when the sector was popular. This is a contrarian-minded group of people who have been through more than one sector and understand the old Doug Casey parable about crisis equaling opportunity.
So in other words, if you liked it at $10, why not like it at $1?
You know, certainly the narrative that was true in 2010, pardon me, is true today. The difference is that with regards to the commodities, they're off by 50%, and the equities are off by 90 and 95%. What part of that wouldn't a contrarian like?
So when people come to this conference, they are meeting with and listening to experts. You've got guys on gold, you've got guys on silver, you've got guys on the economy, you've got contrarians, you've got, you name it. So who's popular and who's not, and why?
Well, we haven't had a chance to see the attendee evaluation forms yet. One of the interesting things about being a conference sponsor, in fact a businessman generally, is that if you service high net worth individuals, the easiest way to figure out what they want is to ask them. And this conference has always been generated by the attendees. If you ask me next week who the most popular speaker was, I'll be able to tell you, because my customers will have told me. Of course, I think I'm the best speaker, but the truth is that the speaker evaluation forms will probably call that into question.
Is there a check mark for humble? Let's talk about gold.
Great.
It's on everybody's mind. Mm-hmm. I mean, everybody here. You know, I think if we took a poll of your audience, right, you might get 50% thinking it's the bottom and 50% thinking it's going lower. Let's get the Rick Rule opinion.
I have no earthly idea, first of all. Let me tell you this, Shelley. At the top of gold's popularity in 1980, by, I think it was Morgan Stanley's estimate, 8% of investable assets among U.S. persons were in precious metals or precious metals equities. The similar number today is 1/3 of 1%. The median and the mean over 30 years is about 1.5%. If gold resumed its place in popularity at 2/3 of the median, that is 1% of investable assets in the United States, that would triple gold demand and gold equities demand in the largest investor market in the world. Are we at the bottom? I have no earthly idea. Are we at the top? Nowhere close.
Question, does it really matter?
It does matter to me in the sense that I'm always early in investments, but if you're too early at an 8% discount or a 10% discount, you're not early, you're wrong. I believe that investors need to have precious metals in their portfolio for insurance purposes, but investors and speculators who have supplementary amounts of gold need to pay some attention to timing.
Does the same thing go for other metals and uranium and oil and gas? Because there's a semblance of it throughout the conference.
Of course, the markets are different. The industrial materials markets have less of an insurance function in your portfolio and more a sense that in the first instance you're hedging against increases in the price of your personal consumption. But those markets also operate differently in the sense that bear markets like this are resolved either through demand creation, that is economic recovery, or through supply destruction. And this this bear market will be reconciled one of those two ways. The consequence of that is that in the non-gold natural resource markets, it's very much like the old Purolator oil filter commercial. You can pay me now a little bit with an increase in demand, or you can pay me later much more as a consequence of destruction of supply.
Last year, for instance, there were more international companies than you had had previously. This year, the talk throughout the conference is about China, it's about India, it's about Africa. Many of the companies that you have presenting at this conference are foreign companies outside of North America. In fact, less in numbers, I think, are the North American companies. What's your reasoning behind that?
That respects the preference of Sprott for companies that are absolutely rather than relatively cheap. Most investors in the world make the mistake of being ethnocentric. They believe that their own domicile is less risky than other domiciles. For me, risk is determined in some small measure, at least by price. We have found that the junior Australian equities are cheaper on a qualitative basis than their competitors in Canada and London. We have found similarly that small companies listed on the London Exchange, which is an institutional market, when they don't enjoy institutional favor, become orphans. They become very cheap indeed. And at Sprott, we like cheap.
So I want to stay with this. I think what you really mean to say is you like inexpensive. And when you search for inexpensive, how many research analysts do you have on the job? I know you're chock full of smart people. So you're actually looking around the world for opportunity, even though you're North American.
We are, absolutely. We have, as an example, 2 full-time geologists that are effectively on the road full-time. The research staff at Sprott, I'm going to guess it's 11 people. We spend an awful lot of money on primary research, more, I suspect, than all of our direct competitors combined.
And you're taking positions in the ones that you feel are inexpensive.
We are. One of the interesting things about being Sprott is that most of our global competitors in small and microcap natural resources have ceased to exist. They are in fact gone. While our position is only the same size it was in 2010, we've not exhibited any growth. The truth is we are the same size. We are the same size in a market where most of our competition has become extinct. So we do take pride in the fact that our market share relative to our competitors has gone from 12 or 15% to probably 70% on a global basis.
Now, I know you don't have a lot to say. So what did you speak on at the conference today?
Well, I talked about the value paradigm that I just talked about with you. I talked about the fact that bear markets, such as we're in, always resolve themselves. If they don't resolve themselves, there's nothing to eat, there's no cars to drive. They always resolve themselves. They resolve themselves either through a rally as a consequence of economic demand or a rally as a consequence of supply destruction. I talked about the fact that the rally as a consequence of supply destruction is longer coming, but it's a much more violent upside rally. Do I know how it's going to reconcile itself? No. Do I know that it will reconcile itself? Of course. This is my 4th cycle, and I have enjoyed the last 3. I have enjoyed the recoveries, of course, more than I have enjoyed the falls. But the truth is, if you're going to take the bow, you got to take the blame. Bear markets are the authors of bull markets, and bull markets are the authors of bear markets. The narrative doesn't change. The way people value the narrative changes dramatically.
Your attendance is outstanding at this conference. The rooms are full. My compliments to the chef. Where do you think the market goes, and what do you think investors are going to do with their money and their positions, if you had to give me a touchy-feely kind of answer?
Sure. Most investors, not the ones that are here, by the way, most investors are going to miss the turn. Most investors are going to return to the bull market in resources. They're going to return to the market at the top. Most investors in speculation necessarily fail because most investors require so much psychological reinforcement to enter a market that the move is over before they have the courage to come in. Most investors snatch defeat from the jaws of victory by buying high and selling low. The investors who are here, the investors who understand that they might not get relief in 2015 or 2016, but investors who understand that day surely follows night will do very well, as they have in prior cycles with us.
So what do you think about 2016 yourself? Any comment?
My gut feeling is that we've passed the bottom, simply from a valuation basis. What bothers me, Shelley, and we've talked about this on your show before, is that we haven't seen capitulation. We haven't seen that 2 or 3 week violent sell-off where markets go no bid. There's no requirement.
What about China? I mean, China comes out. I spoke to Sean Broderick before, and we were talking about how, really, is that all the gold that China has? They made that statement as to what they have, 382 million or 382,000 tons of gold. And I said, that's it? I mean, when they chased margin calls, they were selling metals, right? Is China going to be the cause of the last man standing?
People look for information that supports their prejudices. And China is used in resources to support every type of prejudice. I'm amused that American investors believe that the Chinese would or should or could tell the truth about their gold holdings. Shelley, you will note that the gold that's allegedly in Fort Knox is your property and mine. And our own government has never agreed to audit it for us. So if we can't expect our own country to tell us the truth about our gold holdings, why on earth would we expect the Chinese to do the same? Should we expect the Chinese government to treat us in a more favorable fashion than we expect the U.S. government to treat us? I don't think so. The truth is that the gold market will resolve itself without the Chinese and without the American government. The gold market will revive itself the same way it has always done, because it's the preeminent piece of financial catastrophe insurance in the world. As confidence fades, and it will fade, it will fade. It doesn't have to fade a lot, but as confidence fades, the gold will not supplant the U.S. dollar, but it'll lose the fight less badly. That's what's going to happen, not China, not Congress.
Last question. I read a technical analysis of gold by a major Chicago-based firm that I had written to him. He's a friend of mine. And I said, Goldman's calling gold a lot lower. Interesting. And then he wrote me back, not low enough. His number was 600 an ounce. I throw that out to you. I mean, anything's possible. So where do you think the lows are?
Shelley, I'm an old pro. You're not going to sucker me into answering that if my life depended on it. I will point out to you in the context of Goldman Sachs that back in 2010, when gold was popular and it was at $1,800, Goldman Sachs was calling for $2,600. My suspicion is that the geniuses at Goldman Sachs use a ruler and they extrapolate a trend in motion as long as they have the guts to do it, and they make a market call based on it because it attracts attention to them. I suspect that Goldman Sachs has as much sense of where the gold price is going as the Filipino woman who vacuums this floor this evening.
Ladies and gentlemen, I want you to know I am not contending to agree with Goldman Sachs, but your information is we can't really trust the pundits.
Correct. This one included. Absolutely.
On that note, give us your website.
We can be found at www.sprottglobal.com or by calling us at 800-477-7853.
Ladies and gentlemen, Rick Rule, Sprott U.S. Holdings, Inc. He's the chairman. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott Stansberry Vancouver Natural Resource Symposium 2015. Rick, the pleasure is all mine.
Thank you, Shelley.